Hey guys, it's Joel Olson coming here again with your variable rate update on where things are looking as far as the variable rate mortgage. So of course, let's talk about first where rate movement's been the last couple of weeks. So if we think about this, we have fixed rates have went up in a meaningful way the last couple of weeks. Variable rates, really the discounts haven't changed much. We have prime -1, 110 on some programs, prime -50, prime -70, so a little bit bumped, but that is not moving very much. Now, Bank of Canada meeting coming up April 17th, so remember, variable rates can't change till then. I think a 0.25% increase is going to be pretty inevitable. There is some talk about a 0.50 fixed rate or a 4.50 interest rate increase. Now, what do I think about that? First of all, I think that would be very unprecedented. I'm not ruling out the possibility that's possible, but I mean, we already have some really good indications right now. The market's slowing down, the growth is slowing, and the first interest rate increase already had that effect. The only way we can be looking at increases over and over again, no matter what the media says, is we have to have the rate increases not making an effect on the growth, on inflation, and the growth in the housing market. And we're already seeing that that's happening. So could I picture a 0.5% increase and them still raising more rates? Probably not at this point. But you know, as far as if we're recommending variable and fixed, I mean, yes, if we have a variable rate that's 1.7 right now, even if we have the rate moving up to 1.95, let's say it even is a 50% increase, we're talking about 2.2 over taking a fixed rate of 4.1. So variable still being a much better rate, and also we can never forget about the fact that penalty structuring out of that mortgage much less. So just so you know, and I've said this 100 times, if I pay on a mortgage early, it does not matter. It does not matter if I take a fixed or a variable rate, in the sense that like I will lose all the savings on any rate over taking a penalty. So that's really important to be aware of. So as always, stay variable, you know, and we're still not recommending the fixed rate. If you want to go through some options, the one last thing I would say out is that if you really can't get around the variable at this point in life and you want to the fixed rate, why are we getting stuck on 5-year fixed rates? Would there not be a better situation on a 1, 2, or 3-year fixed rate? Those rates would not be lower, but the penalty structure would be lower. And if the deal is the stability of the payment, then you know you should be thinking about a 7 or 10-year term. Do I recommend those? No, I don't recommend those. But I'm saying if fixed rate has to be the way you go, why are you saying 5-year fixed rate when we could be saying shorter term to lower that penalty, or longer term to give the satisfaction of what you're gonna be at? So anyway, if you want to discuss your mortgage, please let me know. I'd be pleased to help you with that. If you're worried about your variable payment and your rate is not something about prime -1, reach out to me because we can still fix that. We can still lower your payment, and that's going to be helpful as well. We can move you to a lender that has no payment changes, so that could be an option too. You know, all those things can happen. There's other ways we can shield you from inflation here as well and rate increases. Thanks so much. If you have any way we can help you, let us know. Please subscribe to our channel if you're watching us on YouTube and share it with as many people as you can. We'd love to help them in their mortgage journey.